Keep an eye on things like that because they're very, very popular with Americans. Doug Flynn, also popular with Americans, joins us from Flynn Zito Capital Management. So it's like the effect of all of this. And I was asking our political guests earlier is when do people start to say, all right, I support you, Mr. President, on X, but I'm fed up with this because now it's affecting something that affects my life.
Right. Well, the Ford is a great example of the 150 because it is the most popular vehicle. And if you do the math on this, it probably would equate to about a $400 increase on a $40,000 to an $80,000 vehicle in the short run. Maybe later on it's, maybe $3,000 or more. But Ford makes $10,000 to $13,000 per F-150. So, this is where you start getting into how much can they absorb, if they're willing to absorb any of it, do they pass it down to the consumer? And it's going to take a while. All the ones that have already been ordered and on the lots, it's not going to affect. It's down the road. And we'll see if all of this lasts that long. That's what we're really seeing is, with all the changes, we don't know that it's actually going to be here by the time it would impact anything.
So that makes it a stock market conversation in many ways, and and a conversation about people's retirement accounts. Because if a company, because the question is, if a company's going to pass along the effects of the tariffs, right? They're paying a tariff coming in, they're going to pass it along. And people say, well, they will. You say maybe they won't right away, but if they eat it, then that cuts into their profitability and thereby hurts theoretically their stock price, right?
It does. It does if they don't make cuts other places or if they don't get a corporate tax cut, which is still looming out there. Trump is deliberately not talking about any positives of anything right now, perhaps on purpose. And some of those could be tax cuts both on this individual and corporate side, which could offset some, any, or all of this. And so that's why this is very convoluted and people and therefore investors don't know exactly how to read it, which is why the market is just in a little bit of a short-term turmoil. Not anything out of the ordinary, but still trying to grasp it all and figure out what to do longer term.
Yeah, not anything out of the ordinary because we get pullbacks in stock markets. We get corrections, 10% pullbacks in the stock market. That happens, all the time. And it may be exactly what's happening now. So how do you look at it? Someone comes to you, which they do, for advice. And I get it. And the disclaimer is always, it depends who they are, where their position in life is, how old they are. But generally speaking now, are you kind of in that camp of, all right, this is a buying opportunity for a lot of people if they have a long-term outlook? Or are you saying, well, just be careful for a little while because it could be crazy for longer than you think?
If you script it when you're adding and investing, you actually want it to be a little bit cheaper because that's when you're going to be buying. And so normally, if you just look historically, you're going to get on average about 5 to 10% downturns a year. 10% or more corrections happen, less frequently, but still on average about once a year. We haven't had one since 2023. So if you think about that just on average, if we didn't have one in 2024, we were due for a 10% plus correction. So that's normal, and we didn't have one, and they just needed a catalyst. This is a great catalyst to cause a 10% correction. But if you're invested in the long term, then that's what you want. You want to look at that as an opportunity to get in. Now, of course, if you need your money tomorrow, you shouldn't have been in the market with that money anyway. That's a different story. But long-term 401k money, exactly. Yeah, that's what you want.
Always great, Doug. You calmed us down. Everybody relax, says Doug Flynn. We'll talk to you soon. Doug Flynn with us.